guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having an excellent day today. Bitcoin and cryptocurrencies, for the most part, in the green today, despite all of the FUD going on across the globe in Canada, between US and Russia and Ukraine, and also the US Fed having a secret meeting. Nevertheless, we still have a beautiful bounce. In fact, we had a bounce off of this 50 daily moving average. Now, this is a snapshot from yesterday. The price is actually a lot higher right now. So we need to talk about what is happening, why we're seeing this bounce right now. We're hearing people calling for 100K, $200,000 for Bitcoin by the end of this year. Lots of people getting excited. Could we actually realistically see that? Well, there is something that is happening right now, and we have some incredible breaking news, totally breaking news. This just came out today, and it is good for Bitcoin, and it could be incredibly important for the adoption of Bitcoin moving forward, specifically also for the US. So I want to talk about all that today. Lots of things to go over. We're going to talk about a very important key indicator as well. And if you are looking to trade what's happening right now, you can see we are hitting some resistance. I will let you know the key levels to look at and what Bitcoin is getting very close to doing, which could start a massive, massive rally for Bitcoin. So if all that sounds good to you, you know what to do. If you're not subscribed, definitely get subscribed. What are you waiting for, guys? Let's hop in and let's have a look at what's happening right now. So like I said, guys, this was in fact a snapshot of yesterday. Currently, Bitcoin is trading a lot higher. We're right up here around the $44,000 level, but we did bounce off of that 50 daily moving average. So this is really good that we're actually seeing it act as support. Now, I spoke about the significance of these two resistances, and you can actually see right here, we are being held down by the first level. Now, this is very important, right? We had lots of support back here, lots of support, flipped resistance here, and currently we are seeing that again. So short term, this could create a little bit of an issue for Bitcoin. Could we potentially see us come back down? Essentially down here to around the $42,000 level, even 41,200. That could be possible, right? But if we do have this breakout, as I've been saying, the next level to pay most attention to is $52,000 for Bitcoin. Now, I know we spoke about the CME futures gap. I was quite surprised. Look at this fake out right here. Look at this, stopped right above it. It was like as if they knew people were anticipating it was going to go down and fill the gap, and it didn't fill the gap. So I still think there is a very good chance we do fill this gap. Personally, I still think we could go down to $40,700, even if it's just quick, kind of happens really quick in the morning, boom, we're done. 2 hours later, we're back up and trading. It is a possibility, but does it have to happen? No, it doesn't have to happen, right? We have a CME futures gap way down. Where was that other one? Down here at around, this is around 24,600, and that never got filled either. But, having a look at essentially the Bitcoin, cycle, the Bitcoin chart, there's a lot of things that analysts, including myself, I'm guilty of it, because we only have so many years of data to look for Bitcoin. We tend to look to the past and assume that it's going to happen again. But we have to admit things are different. For example, the CME futures gap. Well, for a while, the CME futures was the only way really that you could trade Bitcoin futures. But now we know that there's a lot of other exchange traded, type products coming out, mostly futures based, that are allowing people to do that. Another thing is, we always had this 1, 2, 3, excluding this beginning right here for Bitcoin. And then we had a red candle, right? 1, 2, 3 years of green. And then we have our red candle. So 1, 2, 3 years of green. And you can see right here, red candle. So historically speaking, if we're looking at the 4-year cycle, we should be looking at a red year for Bitcoin. But if you believe in the lengthening cycle the way that I do, because of all this adoption, we have lots of institutional money involved, I definitely think that what we could be seeing is something more like these mini cycles within a massive cycle. Now, one thing that I need to point out, this is absolutely incredibly important, is looking at this weekly EMA ribbon. And the reason that I'm bringing this up is because you could see historically, and you could go all the way back here, really, essentially anytime. You can go back to 2015, and you could see that when Bitcoin tends to break above this ribbon, we usually stay above this ribbon for a very, very long time, right? Like we did back here. And then you can see as soon as we break below it, well, then we tend to stay below it for quite a long time, right? Now, right now, we are doing something quite interesting. It's almost as if we're in muddy waters, right? We're kind of dipping our toes in it, and then we're coming back out, finding a little bit support, coming back underneath it again. However, you can see right here that what we are doing is attempting to break back through the EMA ribbon. Now, one time that we had a very similar sort of sluggish, in and out pattern was right here. This was at the end of 2019. And look, it's not exact, but it's almost doing the same exact thing, right? Where, we break above it, everybody gets euphoric. Then we have this dip into it. We break out briefly, we dip back under it. And then as soon as we come back out of it, that essentially was sort of the mid-cycle mini bear market, right? And look at this structure down here and look at what we're doing right here, right? We have the same type of hump like we do right here. We go down into it, we come back out for a little bit, right? And then we have this dump into it. So actually this would be more like the second hump right here. And then we're coming back into it, right? So we have up, down, and then the last time that we come out, that essentially is the next part of the bull run. So if you actually have a look historically, if we were to break above this, it could actually signal a massive, massive move for Bitcoin. And that level would be basically right here at around essentially $46,765. So if we can get above $46,765 short term, that could be incredible for Bitcoin, especially if we close a weekly candle above it. And if you want to see something else really, really interesting, if we look at some of these, we have these massive legacy trends right here, and we have this shorter purple trend right here. Look at the price where these two intersect, right? So you can see right here, can you guys see right here, they're making an X. There's an X where they cross. If we actually draw a line right there to that exact level where they're crossing, that actually puts Bitcoin price at $46,528. And look at where our level is right here, 46,700 roughly. 46,700, 46,520. So basically, guys, this sort of essentially, why don't we just round it? Let's say if Bitcoin can actually break above $47,000 and close a weekly candle above that level, well then, guys, I think it's absolutely going to be moonshot time for Bitcoin. And then could we get to some of these crazy valuations? Well, it would be possible. And like I said, if you are looking to take the trade, although I'm not a fan particularly of the breakout trades, but yeah, I would look for that level. I would look for the breakout right there around that $46,700 level, breakout, retest. And then honestly, the next level for me, guys, is this $52,000 level. And we'll have to take it from there, but it could be quite amazing. Now, looking at what Plan B has been saying about the stock to flow, he points out to it still going to $100,000 potentially by 2023. Now, he's been getting a little bit of flack for this, but keep in mind, this is based on historically what has happened for Bitcoin. And we know that we are in a brand new territory. You can't look at what used to happen because obviously it's not happening. Bitcoin's been acting completely different ever since the institutions got involved. However, if you do look at what they are saying, you have guys like Tom Lee over at Fundstrat. He still says that we are looking at a $200,000 Bitcoin by the end of the year. So he was talking over on CNBC, and he noted that the aggregate U.S. household net worth is currently hovering at 142 trillion, and people will possibly lose money owning bonds in the next decade. So Tom Lee believes a lot of speculative capital will flow into the crypto market. He says, unless someone really has a crystal ball, it's very difficult to be precise in crypto. Drawdowns of 40% are really common, and Bitcoin makes most of its gains in just 10 days in a single year. It's tough to be precise with crypto. It's wide lanes. And this is something that I tell a lot of people investing in cryptocurrency, right? Bitcoin just kind of hangs out. It does its thing. It goes sideways. It bores people out. It'll drag on for a year or 2 years. And then when you least expect it, it will just moon. And time in the markets is better than trying to time the markets, right? Dollar cost averaging, those types of things are really helpful. So you don't have to freak out about buying too high, buying too low, and all these other things. But, even if you look at Bloomberg, their intelligence report has also come out extremely bullish for Bitcoin. They say despite all assets, especially Bitcoin, experiencing a turbulent price movement, Bloomberg is confident that the asset will not only bounce back, but it will also morph into a global digital collateral. Now, interestingly enough, there was the Federal Reserve President of Kansas City, Thomas Honig, and he was over actually talking to Jon Stewart, and you could even see the look on his face when he was explaining him essentially how, you know, none of this money is backed by anything, and it's basically just printed out of thin air. So even if you're raising the rates, does it really matter at the end of the day when it's pretty much just monopoly money you're playing with, you know, regardless?
In terms of deposits with the banks and currency, be 6 to 7 trillion.
Okay. That they're just injecting into it sort of out of nothing.
Out of nothing. They're the central bank of the United States. Now, think about it. It's just another form of government debt. Am I making sense?
It makes sense in the make-believe world of Conjuring. Like, there is a certain part of this that all feels like a mirage to some extent. Do you know what I mean? It all seems sort of fake.
Well, it's a fiduciary system. It's all faith-based, right?
Oh, my Lord.
Yes, you got to have confidence in that currency, in that dollar, because there's nothing backing. There's no gold backing.
So it's in some ways, it's a mass delusion.
Well,
and something that's even more eye-opening is a lot of people, they'll go over to Google and they'll, type in Bitcoin to USD, and you're actually just seeing the price of Bitcoin in US dollars. So, when Bitcoin goes from 60,000 to 44,000, you're still looking at it in US dollars and you're like, oh no, it lost value. What's going on? But really the chart that you need to be looking at is US dollar versus Bitcoin. So this is essentially $1 US priced in Bitcoin, if that makes any sense. It's flipped. And you could see that essentially we've been just losing value and losing value. You could see back here in March of 2017, one US dollar was 0.0001 Satoshi, whereas today it's 0.00002 Satoshi. And you can see in just the past 5 years, it is down 97.61%. And that doesn't even include the entire 13 years that Bitcoin's been around. If you really want to see how crazy this is, if we go to the max price, it's down 100%. Look, this is Bitcoin and it just, boom, it just drops. And look at this. It's essentially just been flatlining, okay? So when you do compare the US dollar to Bitcoin, pricing it in Bitcoin, would you buy this? Well, guys, it's a double bottom. Let's buy it. No, come on. Come on, guys. Are you serious with this? Now, what is happening? Well, there is a lot of interest in Bitcoin recently. In fact, over the weekend, Saturday was the highest amount of active addresses recorded in 2022. You can see Sentiment said there was 1.08 million active addresses for Bitcoin, which means that there is utility. People are using it. People are buying it. People are getting involved, right? And this is usually something very good for Bitcoin. But I know, you guys are all here for the big breaking news. What is the massive news? Well, this is huge, guys. Fidelity International has entered the cryptocurrency space with the launch of the joint cheapest Bitcoin exchange traded product in Europe, right? Now, we've been talking about an ETF in the United States. We got one, but it was not spot. It was not physically settled. Well, guess what, guys? This one in Europe that was just passed, this ETF, which is an ETF is an ETP, right? So it is listed on the Deutsche Börse and Frankfurt Stock Exchange, and it is physically settled Bitcoin. FBTC is set to list on all 6 Swiss exchanges in the coming weeks. Physically backed, FBTC will centrally be cleared by the Eurex clearing with Fidelity Digital Asset acting as a custodian. Fidelity International said it launched FBTC for institutional and professional clients following a Fidelity Digital Asset survey, which found 70% of institutional respondents expect to invest in digital assets in the future. As this technology becomes increasingly accepted, our clients are rightly asking for an efficient way to benefit from this trend. FBTC offers clients an institutional quality solution to enter the market in a familiar, simple, and secure way. So why do we care? Why is this important? If we're in the US, why do we care that this happened in Europe? Well, my friends, because Fidelity just got this actually passed, and it's going to be on 3 different exchanges, and it is physically backed by real Bitcoin, which increases the demand because they actually have to have it on the balance sheet. You're not just, basically gambling or betting with dollars. Well, if you guys remember, back in December of last year, the Fidelity Advantage Bitcoin ETF, also FBTC, is designed to invest physical spot Bitcoin, a model that the US SEC Exchange Commission has so far rejected. rather than the futures contracts. The application is one of a dozen or more that have been placed on indefinite hold due to the SEC's concern over fraudulent and manipulative activities and practices and to protect investors and the public interest. However, my friends, considering that they just got the green light over in Europe, and this is going on 3 different exchanges right now, when you kind of think about it, right? You think about you think about Europe, you think about things like the UK, and then you also think about the US, you think about the similarities between that, and you have to ask yourself, if we're getting this right now on these 3 European exchanges, don't you think that it's only a matter of time until it comes to the US? And I think that considering Fidelity is one of these players that is, one of the ones pushing these ETFs forward, then wouldn't you think that, maybe they might be the ones that the US goes with? I don't know, guys. Let me know. I think this could be a precursor. I think it could be some foreshadowing. So definitely something we need to talk about. Oh, RBI calls for crypto ban in India. Again, not interested, but I thought it was funny to bring up anyway. But anyway, so yeah, the Indian news is just ridiculous. I don't even care anymore. But what is a lot of people are paying attention to right now is the fact that we do have the Canadian Prime Minister, Justin Trudeau, has invoked the Emergency Act, which gives him the power to freeze Freedom Convoy protesters' bank accounts and monitor large and suspicious transactions, including cryptocurrency. It targets crowdfunding platforms and the payment service providers they use. The changes cover all forms of transactions, including digital assets such as cryptocurrencies. Now, I do wonder if they are able to, monitor this. That's one thing, but what could they possibly do for crypto? I think the only thing you could do is put like a little bit of a chokehold, on the on-ramps and off-ramps, but you really can't stop crypto. And if you guys didn't see the official announcement, this was essentially it right here.
As of today, a bank or other financial service provider will be able to immediately freeze or suspend an account without a court order. In doing so, they will be protected against civil liability for actions taken in good faith. Federal government institutions will have a new broad authority to share relevant information with banks and other financial service providers.
So we'll have to see how that plays out. Very controversial right now, the whole Canadian thing. If you are from Canada, let me know what's going on. What are you hearing? I'm hearing a lot of different things in the news, a lot of different perspectives. But one thing that we can say that is pretty awesome right now is we do have the president of Belarus has signed a decree affirming the country's formal support for free circulation of cryptocurrencies such as Bitcoin. It intends to protect crypto investors from potential losses and prevent unintentional involvement in activities prohibited by law, but the announcement points out that Belarus has taken a friendly stance on cryptocurrencies. They say Belarus is consistently developing the legal field for regulating activities related to digital assets, and unlike many other states, allows free circulation of digital currencies. Also, a little bit nice, bullish news I wanted to put out. MasterCard has announced the expansion of its payment-focused consulting services for open bank, open data, and that's right, guys, crypto and digital currencies. Now, speaking of everything happening, I wanted to end on a bit of a controversial post, or at least something that makes you think. Now, this is from Lynn Alden. Now, she was talking about proof of stake, which is obviously not like proof of work. That's what Ethereum is looking to move to. But she says proof of stake is actually legacy tech. It's actually going backwards, whereas you have some people say, no, proof of work, the environment, it's no good. We need to switch to proof of stake. But she says proof of stake is literally what corporations and banks have run on for centuries. It's outdated and it's oligopolistic, and yet still useful for centralized systems. Proof of work is the new innovation, especially when combined with difficulty adjustments. And one other thing to consider, kind of weird, proof of work systems can be commodities, right? Bitcoin is considered property. It is a commodity. You don't hold Bitcoin. You don't earn anything from Bitcoin. Bitcoin is digital gold. Kind of just sits there, right? However, proof of stake is inherently an equity. Now think about this. If Ethereum does inevitably switch to proof of stake like they say it's going to, well then now you're getting a dividend. You actually own a part of the network and you are being rewarded for owning the network, right? So that actually turns it into an equity. It makes it like a traditional stock, right? Where you're getting paid in dividends. So very interesting. Don't really like mean anything specifically. Like this isn't to take it in any specific way. I'm not trying to say anything about proof of work or proof of stake, but it is something interesting. And for all of you out there that are holding Ethereum, what is your take on this? How do you think the US will feel about it? Will you have to start paying? Because I know they had that thing where they were staking on Tezos, that couple, they did win the court case where they said that they were generating property, right? Very gray area. I'm interested to see. Let me know what you guys think about that below. But as I did say, having a look right here, Bitcoin is breaking out of this area. By the way, we are above the daily. If you are interested in the daily ribbon, but obviously the higher time frames are the most important. And once again, like I said, I have my line drawn right here. This is the level that we're looking at, 46,000, 800, 600, 500. It depends on which exchange you're looking at, but ultimately $47,000 is the level that we need to break. Next level after that, you might see a little bit of resistance around 50. But ultimately, I think we go to 52,000 after that. So if you are looking to trade this, be very careful out there, guys. I highly recommend you check out my tutorials, which will be popping up in just a second. But with that being said, that is it for me, guys. Thank you so much for coming back to the channel. You guys rock. You're the reason that I do this every single day. Make sure if you are looking to trade, you take advantage of the bonuses. We have over $8,000 on just Bybit and Femex alone, and Prime XBT offers a 50% Bitcoin bonus for any deposit. So if you deposit 1 Bitcoin, they'll give you half a Bitcoin to trade with. And if you want to check that out, make sure you check these videos popping up right here, right now. And until next time, stay crypto, and of course, peace out.